Hey YouTube, back with another video, and today I'm going to give you guys an update on my stock pitch from last week, which is ARE, and then I wanted to pitch another stock that I've been investing in and I think has a lot of potential upside throughout next year and the year after that, and that is Cava. As you can see, I have pulled up right here. They just had earnings the other day. They released their quarterly report and they beat their earnings substantially. It was predicted to be negative 2 cents per share and they came in at a positive 6 cents. So they weren't even expected to be profitable this year, and they were profitable last quarter, which is barely, and they're even slightly more profitable this quarter. So if they can just keep growing, I think Cava has a lot of potential. Chipotle is a similar company, but am I comparing apples to oranges by comparing to them? I don't know. So if you look at Chipotle stock over time, they IPO'd for around $42 a share. Cava IPO'd like half that, I think 22 a share, and since then has gone up 5,000%. I think if you account for compounding, financial calculator here, that is a compounding interest rate of over 24%, which is substantially better than the market. I think S&P over the same time frame has done like 11%. So from 2006, it's gone up 213%, whereas Chipotle has done over almost 5,000. So will Cava have the same kind of growth? I don't know, but I definitely think there's a potential that they could. Very similar fast casual restaurant. These types of restaurants are way more popular nowadays in highly populated urban areas where people want fast food, but they don't necessarily want to eat McDonald's. They want to eat something that is a little healthier, at least seems healthier. And so I think Cava has a lot of room to grow there. And I think long term they'll be a great play. It'll just be important to watch them, obviously, and see how they do with their upcoming quarters. And the end of year report will be really great to see as well. So yeah, it's one I've personally been investing in. I think at $30 a share right now. So yeah, right now we can see Cava has just gone down like 30% this year from its IPO. The real test will be next year if we can see that ramp up, that growth in profitability in net revenue. That would be a really good thing to see, especially if the overall economy improves. We see interest rates lower. We're going to see growth companies like Cava, especially one that's already profitable, really take off in the stock market. So I'm signing into the terminal here and I pull up Cava price estimates, and then I'll mention the one caveat that has some investors kind of spooked. The median target price as of right now is $42 a share. So that is over a 30% increase from where we're at now. So the one caveat that has some investors spooked is the fact that 90% of the IPO insider shares, I believe, which is only about like 35 million of their entire market cap. So their market cap's like 3.5 billion. So I believe 35 million worth of that. Those shares, 90% of them are locked up till the end of the year. So insiders can only sell like 10% of their shares. So there's a fear that if they dumped all their shares, it would negatively impact the price. And I guess that is technically true. It could, but it's such a small amount. Again, if we go to, we can see here, so let's see, 21 million, 12, it trickles down. So it's roughly 35 million or so, pushing 40 of insider owned shares. So that's not a huge dent in their market cap, even if they dumped all of them. And I highly doubt the CEO of Cava and any of their other executives that want to see Cava grow, double in market cap or triple or even go up like Chipotle and go up 5,000% over the next 18 years. Why would they sell now when they can make millions and millions more if they do believe in Cava and there's not anything intrinsically wrong with the company, and there really is that long-term growth, and they're committed to the success of Cava. So yeah, that's the one caveat. I don't think there's a whole lot of merit to it, and it's not scaring me away from investing. I'm still investing now to get some skin in the game, and I guess early next year, if Cava's still around $30 a share, we haven't seen some crazy sell-off from those insider shares being freed up, I'm definitely going to be buying even more. So again, make your own decisions, do your own research. Don't just listen to what I say. If I'm missing something, definitely dig it up and let me know. I'd love to see what you can find. But I think Cava is a great long-term growth buy right now, and it's definitely one of my favorite stocks. And so lastly, in the video here, I'll give an update on my last pitch. I bought it at like 92 a share. Yeah, I got it like here, and it spiked a good bit, and I was like, oh, sweet. So I'm still up a little bit, but not a ton. Either way, I think around $90 a share is a pretty good purchase price for ARE long term if you see a lot of value there. Anything around 100 is probably good. Because what's going to affect this? If we see interest rates start to drop, ARE stock will probably do pretty well. And I believe the price targets are like mid 100s, as I outlined in the last video. If you haven't watched it, watch it. It'll be linked at the end of this video, detailing how I kind of analyze the fair value is probably mid 100s. So we can see here the price target. The median right now is 124. It was higher earlier this year, so it's come down. But again, uh, do your own analysis. I would disagree with their analysis. I think they're a little too conservative. Just because it's selling off, they keep lowering it. And I don't know, at an all time low, is that the time to be marking down a stock's price target when they're a valuable company, they're a quality company? I would go against what their recommendation is there. But again, that's just my opinion. Do your own research, and I would love to hear some comments about what you guys think about ARE and Cava. I'll try to upload again next week with some updates on these guys and any other stocks that I'm personally buying. What I've been watching, I'll add is Simon Property Group because, again, I'm a big real estate guy, so I love REITs. But it just hasn't gotten cheap enough for my liking. It's doing pretty well, and I haven't been convinced to pull the trigger on buying it yet. But if we see it sell off anytime soon, I'll definitely be making a video about it. All right, that's all I got for you guys today. Again, please leave your comments, and I'll hopefully see you next week.